Welcome back to Investing for Beginners community. I'm your host, Johnny. In today's video, we're talking about SPYD, or the Portfolio S&P 500 High Dividend ETF. Now, I did have a group member asking about this, wondering if it is viable and still worth purchasing now in 2024. We're just a couple of days away from that. So we are on the Seeking Alpha website, and we are going to be using their information here to go over this company. Now, if you want to sign up for Seeking Alpha, there is a subscription program you can get. Now, basic is limited access. You do get stock analysis, email alerts, real-time news updates, access to stock prices and charts, Wall Street ratings for every stock, and limited access to content. Now, with the premium version, when you sign up with the link below, you do get a discount when you sign up with my link, and I get a small little commission fee that doesn't cost you any extra. And that will include unlimited access to premium content, Seeking Alpha's analyst ratings, which are locked to limited access members, Seeking Alpha and analyst performance, stock quant ratings, and stock dividend grades. Now, we are going to get into all that right now. So all that I ask is that you subscribe, and at the very least, just smash the like button and enjoy the video. So we are going to go over SPYD in the Seeking Alpha platform first, and then I'm going to show you some huge differences in the Robinhood portfolio or the Robinhood app platform online, and show you how much better and how greater this Seeking Alpha platform really is, and when it comes down to it, if it's worth investing in SPYD. So stick around till the end for all that. Now, as you can see here on the 5-year, I like looking at 5-year. It gives you a little bit more of a story. Now, companies do tell stories over time, and you're not going to know much about the company on 5 days. Like, this looks great, right? In 5 days, it's, you could bought in at $38 and you'd be up, about $1. But in 5 years, it tells a true story here, because 5 years ago, it was sitting at about $33, and now it's about 38. So it had a lot of ups and downs. This is when the pandemic happened. So it's definitely going to take some time to get back to where it normally was. Now, it was at 39, 37 pre-pandemic, and now it is about the same, right? So their rating from the S&A analyst and the quant rating is saying it's a hold at a 2.5 and a 3.1 or 3.21. Now, basically, their momentum is showing a B now, but their 6 months ago was a C, 3 months ago was a D. So they're definitely trailing forward. Their expenses is at an A plus, their dividends at a C plus, their risk is at a C minus, and their liquidity is at an A, which is awesome, right? Here's the quant ratings for everyone else that's curious. Now, it is a U.S. equity. It is a large value subclass. It's ranked 790 out of 2,400, and ranked in asset class 419 out of 518, and ranked in subclass 46 out of 106. So with that said, okay, analysts are predicting that the 5% expected dividend yield will come back with huge risks. I never knew a 4.6 dividend yield could come at such a high price. So some of them are saying that it is definitely overvalued. And I would definitely wait for the dip on this. Going back to the charts here, it is a bit overbought, okay? I would wait till maybe it kind of comes back into this new area here, $35, $36. Heck, if you can get it for $33, I would wait until then if there is some slight pullback. Now, their holdings breakdown, their financials is 24%. 21% of their holdings is in real estate, 14% in utility, and then there are these categories that are under 10% but over 5 would be consumer, healthcare, energy, and then everything under 5% consumer defense, basic material, technology, communication, and industrial. So a majority of it's going to be in financial. Their top 10 holdings right now is Seagate Technology, NRG Energy, Phillips 66, Amgen, Fifth Third Bank Corp. Now, Fifth Third Bank Corp is pretty cool. They have, if you see armored trucks out and about, those are Fifth Third Bank Corps. They're like in white vans, and I know there's some here in New Mexico. I'm sure there's some across the country, but that is very familiar to me. Key Corp, Zion Bank Corp, Packaging Corp, International Business, and Simon Properties. Now, this is a total of 80 holdings, and it's about 15% of their total holdings, right? So that's interesting. Their rating, 3.21, so they're saying it's a hold. Here's the ETF grades again. Quant ratings. And this looks like for almost every day, if not, it'll skip a day or two, but almost for every single day. Shows momentum as well. Price performance. Price return over 5 years is 16%. S&P 500 is 93. Total return 47. S&P 500 110. And this will show a breakdown compared to the S&P 500. So the S&P 500 definitely outperformed at 24% in the last year. In the last 5 years, S&P 500 is at 93%. So if you want a slow and steady paying dividend stock, then maybe you'd want to look into this. And Seeking Alpha just has so much content. I mean, we could do hour-long videos. Expense ratio A+, because they do have a very low expense ratio at a 0.07. Dividends, their dividend yield is an A-. They have a 4.66 dividend yield. Now, their dividend growth rate right now is negative. Their 3-year growth rate is 3.8, and their 5-year growth rate is 2.45. They've been paying dividends for over 8 years consecutively, and they have a B+ for that. Now, they are in the D's for dividend growth rate, and their next payout would be 53 cents. Payout date would be 12/20, and the ex-dividend date, you would have had to own this company by or on 12/15. And when I say by or on, I do mean before 12/15, because sometimes they'll take roll call like that morning super early, or even sometimes like that at night at midnight. It just depends, but I'd always say play it safe and purchase it like a day or two before the ex-dividend date. That way, you will be able to get that. I don't look like there's any current ones. Dividend yield. You could look at the yield a little better on cost, history, maximum minimums, which is awesome. They're at 5% in 2022. So they're talking about possibly getting back up to that. Payout amounts per year. It's slightly going up. Now, it was at a 174, and then it went down to 163, then back up to 198, and now it's slightly down. So they had a 28% annual payout growth year over year in 2022. That's interesting. Very interesting. Standard deviation's about a C-. Liquidity is always an A, of course. Peers. Expense ratios, look at this. Compared to other companies, the expense ratio is rather low. This is at a 0.25, 0.13, 0.45, 0.1, 0.2. This is at a 0.07. So as far as expense-wise goes for this ETF, it's very low. That's really good. It was also its inception date was around the same time as these other companies. And the insurer is the SPD State Street Global Advisors, whereas the other ones are Invesco, SP Funds, stuff like that. Now, this is cool. Over 5 years, SPYD is this orange color. Wow, that's horrible. SPLV, so compared to their other peers, they did not get very good price return at all. Now, what about total return? Not quite as much either. They're at 47% total return, while everyone else is either double or at least a higher. Okay, let's see. What else can we look at? Where's the dividend? Dividends per share? Nothing. Okay. So there's so many options here. I mean, you can even look at total employees if they had data for that. I mean, it's just really cool, the difference and all the different stuff they have on this platform. So now let's go over to so if you do want to sign up for Seeking Alpha, check it out. At the very least, to get the limited access, anyways, just sign up with the link below and at least get into some of this early access stuff. Now you're not going to have like analyst stuff, but man, there's so many things. There's if you want to learn about dividend strategy, there's tons of articles on dividend strategy. If you want to learn more about ETFs and funds, there's stuff on ETFs. Maybe you're interested in IPOs. What new initial public offering stocks are coming out? Well, here you go. LZ Technology Holding begins US IPO rollout today at 11:25. So definitely check out Seeking Alpha. Use the link below to get on over here. Check this out. Check out the premium. It's not as much as the pro. The pro is a really good feature for people that are a lot more advanced. But again, because this is investing for beginners, I recommend just going to the basic or even the premium if you like those alpha analyst ratings and the stock dividend grades. It makes investing a lot easier. So now let's go over to the Robinhood. A lot of my viewers on this channel know me from the very first videos I made on the Robinhood channel, where we were able to get over, I think we got close to 100. It's like 60 or 70 free shares with people signing up all over the world, including family and friends. And we were able to get that portfolio, or this portfolio, up to around $3,000. It was a great fun time. Many years ago, I'd say probably closer to maybe 8 or 10 years ago. So if you want to see those, you can go all the way back to the beginning and see how I first started out on the YouTube channel. I literally was writing down stock prices and amounts I bought on a giant whiteboard paper, just a paper. And every time I'd make one, I'd have to rip it up and, of course, start over new. So definitely come a long way from that. So this is a platform, Robinhood.com. Now there is a link below as well. You can sign up and you can get a free share when you sign up. You could also get a free share when you invest and put some money in. There's a lot of different ways you can get free shares when you sign up, but when you do sign up, I will get a free share and you will as well. And it can be up as high as $200 or $300 for that share. It may even be higher now since the last time I signed up. I did get a share of Facebook one time for someone signing up, and I believe they got a share of Tesla. And man, I got like $170, and I think he got close to $200 just for signing up. It takes 5 minutes, easy to do. It's free, and yeah, you could put $5 into it. You could put no money into it. It doesn't matter. But very cool for Robinhood. Now, the Robinhood platform is quite interesting. There is an advanced feature. We're not going to get into that right now. But the SPDR portfolio S&P 500 high dividend ETF is saying that it is up 17%. So I do like the functionality of that one instance where it shows you really quick and easy your percentages, how much it was down when you scroll over. It was down 33%. Pre-pandemic, and then it shot right back up. Took about a year, but right back up. Now they are 26% over where they started, but if you were to look here, they're down 33% and they're back up 26. So that's like a 50 or 60% swing in the positive direction. Now they did stabilize, and now they're slightly going down. Now I don't like companies that have a downward trend. Now they are down 1% in a year. If you have a company going like this and they're just slowly going down over time, I would not invest in that company. I would wait to start seeing some forward momentum. Now you are starting to see some of that forward momentum here the past 3 months. Now they are up 12%, which, you would say is pretty good, coming down from starting at $33 in October 27th. Now, if you would have bought some shares there, you would have been able to make 12% on your earnings right now since October 27th, because you're at $33 when you bought it and you're now at $39. But let's look into some of the other features besides just the chart here, right? Because the chart, it's saying it's up 30% max life, and 30% isn't much since October 2015. There are some companies that do 30% every single quarter, if not every single year. So with that said, the S&P tracks an index of 80 highest yield stocks selected from the S&P 500, which are equally weighted. So really, you could just invest in the S&P 500, right? Well, what's in this fund? The sectors as of December, which was just a few days ago, because Christmas was 2 days ago, so 5 days ago, this was their sectors. 24% of it was in financials, 14 in utilities, 7 in healthcare, 4 in consumer defensive, and basically it's showing the exact same thing, and it breaks it down in a cool little pie chart or little block form. Same stuff as Seeking Alpha. And now Robinhood is free to sign up. There isn't any advanced features you have to pay for. It's a bit different. Now, this is a brokerage platform, so it's a bit different when you're looking at statistics on a brokerage platform compared to looking at statistics on an actual like a stock analysis platform, which is what Seeking Alpha is. They have so many analysts and ratings and people and quantum and just a lot of stuff that will really help you deep dive into these markets. Say you like Phillips 66 and you've seen it here as you were investing, then you could go over to Seeking Alpha and take a deeper dive into that stock, right? Because right now, all you're going to see here is a little bit of information and key statistics and your average annual return. Now, key statistics are very good. They're simple. If you want to just quick answer, price earnings ratio 15. Your lows and highs for the 52-week, and then for the day, right? Okay, how many people own this? 6.86 billion. Okay, now this is different than well, this is how many people basically own it right now, right? And then the 30-day yield, the expense ratio, that's great to have. Average volume, now they're saying there's about 1.5 million volume every single trading day. And, or I'm sorry, no, that's the average, with a volume of 224,000 every single day. So not too bad. Month end and quarter end. So month end, they're at down 7% for the year. They're up almost 10% in 3 years and about 5% in 5 years. Only about 7% since inception. 13% if you go quarter end in 3 year and 3.5% in 5 years. So not bad, right? So that's basically it here. It's really just a real basic understanding of what you want. Still a great platform to use, and this is where I would buy my orders, limit order, stop loss, stop limit, trailing stop, recurring investment, stuff like that. But if you really want, that's like the meat, and this is like the potatoes, but this is really like the meat. This is really where you want it, right? This is what's going to help you to get what you want. Now, my best dividend aristocrats for January 2024, check this out. There's a whole article right here. It already has 15 likes, and it came out yesterday afternoon. So less than 24 hours. I mean, this site is super popular. Everyone's using it, and you're going to get the most up-to-date information as it comes out. Now, this one's saying Noble is one of those companies. And then, man, look at this list of ETFs right here. You guys are getting some gold right now. And so if you're watching at this point, here is a list of ETFs with their percentage of what they beat Noble year to date through the month in November. That is amazing. Ecolab's on there, Stanley Black & Decker, Aflac, Walmart, McDonald's, Caterpillar, Clorox, Procter & Gamble. That's really awesome, guys. So if you want to learn more and see more on Seeking Alpha, definitely leave a comment below saying that you like this video or you want to know more about it. If you want to just take a deep dive on your own, click the link below. And if you want to sign up for Robinhood, definitely go over and do that today. You'll get a free share and you can start investing and get started on your investing journey today. Okay, guys? Hope you enjoyed the video. Go watch something else and definitely smash that like button and subscribe. That way you get notified when I post more videos like this. All right, you guys have a great day.